EduTrainment Workshops, the insurance industry's leading education and training platform, presents Life Insurance, the entry-level series, the products, the underwriting, and the planning applications to position your practice as the premier provider of insurance products in your community. Get on board, get on track, get to where you're going. And now, your EduTrainer, national insurance columnist, Steve Savant.
Hello everyone, I'm Steve Savant. I'm your EduTrainer and coach throughout these series of life insurance on entry-level sessions in the workshop. And we're brought to you by Lincoln Benefit Life, an Allstate company, and we're using Lincoln Benefit Life software because their Eclipse system is so user-friendly. And if you want to go out, and we heavily recommend this because when we get into using their software, we'll want you to be able to already have downloaded. I want you to go out to their site, www.lblsales.com/ETW. That's lblsales.com/ETW. And when you come on, you just click on the Run Installer and download it, and you'll be able to go page by page. When we get into proposals, if you're coming into our business, maybe you're a medical agent, maybe you're property casualty, maybe you're an annuity person, maybe perhaps you're coming in from a medical field. It doesn't matter what area, banking. If you're wanting to learn about life insurance, this is what our class is about, our workshops are, and we're using Lincoln Benefit Life software. We're also giving away our life manual, and it comes with a huge vocabulary. You can order that as well at thebiz, THEBIZ, thebiz at brokersalliance.com, and just say, send me the life manual, and we'll send it to you, including the patented vocabulary. Today, we're going to go down kind of a little bit of a different road today. We're going to walk through basic life events. Now, I say basic, and there's about 30 up here on the board. Believe you me, there's probably more, but what I've tried to do is try to touch the basic life events. When I think about life insurance, I'm trying to indemnify myself, I'm trying to protect myself, I'm trying to cover my loved ones from any economic loss. If the insured, or in my case, if it's me, if I'm the insured, I'm trying to cover and protect my family from my not being here. Something happens, I don't want them to be in economic straits. So look at these life event checklists. And again, this checklist is in the manual. All you have to do is order it at thebiz at brokersalliance.com and we'll send it to you. The first one, these are common life events. A new child, a new grandchild. Every time some child is born to a family, you're now thinking about that child's future. And if you're not there to provide that future, can I buy life insurance to ensure the dreams that I have for this child or grandchild come true? So it's critical in my thinking. For one of the first things I do, and by the way, what's really great about talking about life insurance, it's excellent for new children or new grandchildren because it's a happy time. So everybody's already up thinking about it. A new job or promotion. Perhaps you had an increase in pay and you want to be able to protect your income. If you're 45 today and you're saying, well, I'm going to be working at least till 65, maybe even 70, I want to be able to protect that length of period of time so that my spouse, my children, my partner in business, doesn't matter where it is, I want to be able to protect my ability to earn with life insurance if I'm not there. Another one is I may receive an inheritance. When I receive an inheritance, that may now increase my assets. It'll blow my estate. It'll inflate my estate larger. And I haven't thought about that before. Do I cross over the unified credit because of it? Or simply, I'm going to have ordinary income tax. Maybe I receive the inheritance, but it might be exposed to some form of taxation. I'm looking at events like this where I can use life insurance to protect my ability to transfer an inheritance, just like somebody gave to me. Number 4, another one, major investments, gains and losses. A lot of people don't think about life insurance in this way. If I want to protect my principal, it may take about 6% of my total investment so that I can send that principal on to the next generation so that the principal's secure, and then I can go ahead and live off the income if I want to. When you think about it, 6 to 10%, somewhere in the vicinity, depending upon health, you're going to be able to see those numbers protect your entire portfolio. I can always send the principal on to the next generation, so if something happens like it did in 2008, I know I've at least got my principal already taken care of and I've given it to my beneficiaries. Health concerns. Sometimes we have common issues that maybe affect us health-wise, but it might be morbidity. Like, for example, a disability may not have a lot to do with maybe my life insurance because it's a mortality product. So when I look at that, I want to be able to say, can I cover some of my health concerns with life insurance in case I'm not around? Maybe I already know my family has a disposition for a certain disease. I might want to buy my life insurance now ahead of the game. So before, if I have a propensity for, like, let's say diabetes in my family, if I think I'm at high risk, if I have a genetic disposition in my family, this is an excellent way to get it now while I can, and I'm still looking like a non-diabetic. Here's another one, change in marital status. Oh, well, think about this. Since the last generation of the baby boomers, more than half of all who married in the last 40 years have divorced. Our society has undergone a huge revolution in the ideas of living longer, being with the same person that you married. We have to accommodate this. And by the way, this comes into play depending upon what state you're in, because community property state's a whole other thing. We'll get into that a little later on, maybe about a month from now. But change in marital status. I'm getting married. I'm getting divorced. I'm getting divorced because I'm remarrying. All these things I want to add into my equation. Another one, change in estate plan. Well, sometimes I've noticed one of the changes I saw recently was one of my clients says, I'm giving a piece of my assets to my charity. And then when their children found out about it, their beneficiaries, they were a little bit distraught because dad just gave a piece of their inheritance to a charity. And so, not to worry, we used life insurance to go ahead and replace the gift because something changed in the estate. If I gave it away, maybe I'm going to have other issues that I have to think about, including I might want to skip a generation and do something for my grandchildren. That's not a traditional estate planning issue from the next generation, but I'm anticipating the second generation beyond me. So that's someplace to look at. Sale or purchase of a home. As we moved up in the economy, or you moved up in your earnings, sometimes you trade your house up so that you can get a bigger home. You're having increasing family, and that size, that mortgage has to be protected. It's generally the largest debt you'll ever incur during life, and it's something you want to protect. As I spoke about last week, if you have two people earning money, you need to cover both of them because the mortgage is predicated on dual income. So it's important to heads up that mortgage is the number one asset that you probably have, especially if you're a young person, and you want to be able to protect it. Sold or acquired assets. Now, there's things that you've sold. For example, I saw an inheritance the other day where it was very much into artwork, but the people that inherited it weren't really into art that much, so they didn't want to keep it. So they were able to go ahead and sell it. Well, they had to figure out, is there a sale here that's going to cause a taxable event? And is that sale, so should I give it now or should I give it at death? There's all kinds of things. How can I cover off future tax liabilities on the sale of assets? Is there any way to do it? And if I can do it, I want to use the leverage of life insurance and the discounted dollars in premium. Another one is death of a family member. Sometimes now the death of a family member, all of a sudden now you're the person people are depending on. So it's really good, heads up, my father might have died. Now my mother's depending on me. And if something happens to me, she wouldn't have inflow or cash flow. So she's depending on me. So I'm going to go ahead and take a contract, put it onto myself, a policy. So if something happens to me, my mom is secure in whatever facility or whatever she wants for the rest of her life. I'm protecting her because a death in the family occurred. Now I have to step up to the plate and I have to become the breadwinner. Another one, new investments of insurance. Well, a lot of times I see insurance bought simply because, hey, the tax advantages are great. I'm using it as a supplemental income or retirement income. And so I want to be able to look at that. And remember, because insurance, especially permanent forms of universal life, they have several ways to go on this. Current company assumption, again, we're going to get into all this in the weeks to come. Current company assumption, indexed, and also variable life, which is based on the equities of the market, equities and bonds, of course. So I just wanted to bring up a few of these things, and the gain and loss of a business partner. If we're in partnership together and something happens to me, in some states, you may inadvertently be partnering now with my wife because she inherited my part of the business. I can protect business succession planning and have everything go to my remaining partner or partners. I can make the plan and the document for business succession planning and then have life insurance fund that event if it occurs. Here's some areas that I just want to talk about in the generic. They're concerns. I just mentioned previously retirement planning. We're always looking at retirement planning, and the way we're living longer now, the new 65 retirement date may turn out to be age 70. And because we're living longer, our new numbers may be 95 to 100. Think about it. Every day, Willard Scott says, happy birthday to a handful of Americans that turn 100. You could be that person. You want to be able to place your retirement planning in a way, and sometimes using life insurance products is a great way to help plan for that. Estate planning, again, why should I pay the government huge tax amounts at the transfer of my estate to my children or the charity of my choice or my grandchildren or a business associate? Why should I do that when I can use the leverage and the discounted dollars of life insurance? The healthier I am, the better bang for the buck it is. Taxes are always going to get paid. Should it come out of my pocket, or should I buy discounted dollars through life insurance and pay way less? Major asset purchase or lease. Sometimes I'm going to buy something that's really huge. Maybe I'm buying a new business, or I'm buying a huge vineyard for my family and I'm going to set my house there. I need to protect all the eventualities of anything that goes wrong, especially if I'm not there to oversee it, if I'm not there to earn money to pay for the payments. I just want to be able to accommodate every possibility. Education and funding. I have children, I have grandchildren. I want them to seek a higher education. If I do this, if I'm not around, I want whatever they need to go through, whether it's their bachelor's degree or their MBA or their PhD, I want to try to accommodate their education, and I can do it with discounted dollars because the leverage of life insurance is just that great. Looking at income tax planning. A lot of things we forget about in estate planning, well, we don't have an estate tax, so everybody relaxes. But you still have to pay ordinary income tax at death on your 1040, and have you accommodated that? All your assets, depending upon how they're transferred and sent to the next generation, or does it go through the marital deduction to your spouse? We don't know, but we need to look at all those things. Those are definite considerations. We talked a little earlier about business continuation. Remember, there's many ways to skin the cat on this, and we're going to be talking about it later on, probably 2 months from now, on business succession. Should we be using a buy-sell agreement? Should we be using cross-purchase? Should we be doing stock redemption? Or this cool idea called wait-and-see trust? Then disability income. I want to be able to protect my life events. Did I have a disability? When I was a younger man, I actually had an accident playing tennis, of all things, and I was disabled for 6 months. So I had income coming in. I might want to put a waiver of premium on my life insurance so that even if I have periods of disability, as I did, my life insurance premium is still paid. It can pay the full premium or just pay the cost of insurance. Each carrier is different. We'll talk about that later as well. And remember, when I'm doing an investment review, I'm also looking at my ability to put money aside, and if I'm not there, my investments are going to go to who? So I need to be able to start thinking, if I'm going to use life insurance to protect my investments, as I said earlier, that's another area. When I do investment reviews, you can't help but do protection idea reviews. So if I'm looking at investments, I'm going to also, before I get into that, I'm going to review my clients' life insurance, their disability, their medical. I want to know all about those areas before I get heavily involved in investment review. Survivorship benefit plans. This is huge because we know that generally women outlive their husbands, sometimes same age, between 7 and 8 years, sometimes much longer. We want to make sure they have the income necessary so that they can live at the lifestyle that we already had projected for them when we were alive. So it's very important to make sure that we have really walked through survivorship benefit planning. I think it's the most neglected out of all the things that we do. I would say that's got to be right up there. And I also want to use health LTC planning. When I'm looking at health and LTC planning for that, it's a natural to look at insurance. You're already talking about long-term care insurance. It's a natural part of the conversation to bring up life insurance. And the last, charitable giving. Sometimes I can give more with life insurance than I can out of pocket with assets. So it's very important. I'm going to look at charitable giving because even a person with small wallets has a big heart, and for just a few $1,000s a year, he might be able to give to the charity of his choice in a big way. So that's our life event checklist, and it's in our manual.
This has been an EduTrainer Workshop, the educational division of the National Insurance Clearinghouse, the marketing arm of Brokers Alliance, and sponsored by Lincoln Benefit Life, an Allstate company.